Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, stock market participants focused on tariffs again this week, selling on the fear of, certainly not wanting to get caught in a big trade war, and then buying when there seemed to be doubt that the trade war would be actually executed. A lot of talk, a lot of rhetoric, but seemingly nothing real happening yet on that front. It was a very nervous market as we had this seemingly fear of missing out coming into the market after we had a comment from Chief Economic Advisor Lawrence Kudlow saying, me worry, don't worry about anything. Then of course, the president came back in and scared the markets on Thursday night, talking about another $100 billion in tariffs against China. So they came back and said they're going to retaliate. So the market's very nervous again here on Friday. The comments that came out of Larry Kudlow, I don't give him any credit, to tell you the truth, for the market bouncing. It was just very due for a bounce after getting a big hit over the last couple of weeks. Markets were under severe pressure. They had gotten down to a level of some support, and we had some bouncing. And as far as I'm concerned, he has no cred whatsoever. Now, everything that he says has a positive bias. I've been watching him for decades. Remember, he had his own show that was preceded by Kudlow and Kramer. They were good together, and Larry Kudlow was a good host. But he's a terrible forecaster of the economy. And he's, after all these decades I've watched him, I just don't put any credence to anything he says. And maybe that's why the president appointed him, because he's not going to listen to anybody anyway, so he might as well have somebody out there putting up a bullish front for him out there. So the market got a bounce, and a big bounce, and he was credited for it. I've heard lots of people say the Kudlow bounce. Well, it was just coincidentally timed and really nothing to do with reality. Of course, the rhetoric did pick up here on Thursday night and Friday, and that had to really surprise Larry Kudlow after what he had come in and said about the markets. And China now plainly is not going to back down from this, and the markets are going to continue to be rattled. We think that there's a big trading range now that we're going to see in the market, and we're going to show you that in the short-term view coming up. Basically, there was a lot of damage done in this market, and that especially has occurred in the technology sector. We expect those stocks to continue to struggle, and the thrashing that we're seeing in the market we think is going to continue. So stick around for the short-term view. We'll see the trading range that we think that the market is in, and we think that just simply a consolidation. Yes, resting, consolidating. The bottom pickers getting in there and thinking they're getting a good deal, and then sometime, we believe, late April and all the way through June, the market has got big risk for another big leg to the downside. Let's take a look here as we look at our 60-minute chart of the S&P 500. Gray area being the overnight area and the white area being the actual pit traded timing, that they call it, because I used to be a pit trader back in the old days. Yes, I am a dinosaur. Take a look here at Monday. What happened here was that Sunday night, Monday morning, POTUS came out again, hitting at Amazon. That put a lot of pressure on the indexes overnight, and China came out and retaliated, and ISM numbers came out, and the prices paid surged, the highest in 7 years. Add all of that together and you had a huge amount of selling that came in on Monday morning. And then Apple came out and said that they're going to use their own chips in Macs instead of Intel chips, and that then put a lot of pressure on Intel, and that continued to weigh on the market as the NASDAQ got hit very hard. Then on Tuesday there were big swings in Amazon as Bloomberg came out and reported that President Trump is not actively looking for ways to deal with Amazon issues. Later in the week, we heard that he is again. So we had these massive swings in the market right in here. Amazon leading it, getting hit very hard here. Amazon rallying back really strongly there, and that lifted the market on Tuesday. Tesla news came out. Tesla's been a stock that I've been looking at and talking about all week long, as their production was better. And we're going to show you that Tesla chart in the best for the week, because it was the best stock that we watched for the week. But their production still missed by a ton. They're only making half the cars that they said they'd be making at this point. So I guess they're celebrating that it's not even worse. And there's some talk about whether the cash burn is as bad as they thought. Here's where the China tariff retaliation news came out overnight. The market got slammed on that news again. The Dow was down 500 points overnight, and Kudlow comes out, says don't overreact. We had a huge reversal. This point here to this point here on the Dow, 1,000-point reversal. It was one of those amazing things that we don't see very often, and a huge update for the market coming there as it tested this low. You could see that right over there, and then made a bottom and moved up, and it's starting to define a trading range in there. So trade fear wars ease here a little bit on Thursday, and that helped extend the market. It held up on Thursday, just some choppy action in there. Zuckerberg tried to calm Facebook investors by doing a Q&A, and they got still massive problems out there. And that Dow 1,000-point move is just incredible that we saw in just those less than like 24 hours right over here. And then overnight here on Friday, late Thursday and Friday, President Trump came out with this comment about $100 billion in new tariffs, and then the market sank in a big way. This was a 40-point decline almost instantaneously in the futures, and you could see that it tried to climb back, as it seemingly does all the time, and then got hit again, and now has been very, very bouncy here on Friday, as we now have about 2 hours to go in the trading session. So China, threatens a response. Well, this is just going to go back and forth. Payrolls did come out up 101,000. That was a miss, but March tends to miss, so that's not that big a deal. And there was some weather issues, so I don't think that's considered to be much of a issue right now. And wage growth was up 2.7%, and that is pretty much in line. So there's really nothing out of that payroll number that was, in my opinion, very significant. If we start to get some numbers under 100,000 going forward, and or the wage growth increasing, that is going to be worrisome. And of course, my opinion is that we still have a bear market in the bond market, and if we start to get more wage growth, then we're going to start to see the bond market get hit again. Bond market has done horribly in this period that it could be rallying with a weak stock market, and our cycle analysis showing a rally phase that we're in. And it's rallying, but it's going nowhere really. And I would say bulls have to be disappointed because it's not doing better in this weak stock market condition. No real safety bid. The bears have to be frustrated in the bond market because, well, it's not going down for them yet as the stock market and this tariff issue keeps the buyers coming in, at least in some minor way, in the bond market. So it's frustrating everybody, that I would say, but I see the risk rewards increasing to the downside in the bond market in the next several weeks. Not quite yet, but sometime in the next several weeks. So the stock market for the week, major indexes, after all of this massive fluctuation, are just fractionally higher in a small way. Bond market, small down, 10-year yields pop about 4 basis points, so not all that much going on. The dollar, a bad down day on Friday, which is reversing most of a good day on Thursday, which makes for a small upside week in the dollar. Gold market, gold had a big day on the upside on Monday as that stock market got hit, but then chopped its way down for most of the week and gave most of the gains up about $7 on the week for the gold market. And the oil market down all week long. The tariff news is not good for the oil market because if we got into a real trade war, we would see slowing worldwide economies. Yes, free trade is better for the world economies, and when you have tariffs and trade wars, it slows world economies, and that's why oil is under pressure. Down about 240 on the week, and moves down into some support around that $62 area, following the pattern that we expected pretty closely, and we're going to show you that also in the short-term view coming up in just a few minutes. So that is the opening segment. We're going to get right in here to the best and worst stocks for the week. All right, as I said, the best stock for the week was Tesla. Full disclosure, I'm short Tesla, and we put out a trade setup for our subscribers in Tesla on yesterday, this morning, and it's gotten up into a pretty important resistance area. So we're going to look at Tesla stock, and we're going to look at a bunch of other stocks that are that have had good upside moves and in the worst good downside moves. Before we get to that, if you want to learn technical analysis, well, this is certainly the place to do it. Our video library, which by the way has 8 categories of videos and nearly 300 videos in there, has got many videos on all aspects of technical analysis, well, that I follow, and I illustrate those on the Thinkorswim platform, but you can really use that information on almost any platform. And if some of these things are a mystery to you, then you're going to be able to learn a lot about that in our tools for tech segment of videos, which has just an amazing amount of videos for you to learn technical analysis. If you want to learn this cycle analysis that I'm going to show you right now, we are in our pre-launch period for our cycle analysis workshop. This is a workshop with 20 video modules. It took me 2 years to write. It took me about 6 months to produce. And it's me sharing my 43 years of study of cyclical analysis with you, teaching it to you on a step-by-step basis. And right now in this pre-launch period, if you go to our website, go up to where it says workshops on the top navigation and click on cycle analysis workshop, you'll see that we're in our pre-launch period and there's a 30% discount. Now that's only for the next week or so. So don't miss this possibility to learn cycle analysis from me. I am one of the experts in this type of analysis, and it'll give you a better market feel, better understanding of markets and the energies of movements and correlations than you will get in any other type of study in the markets. and it looks at both price and time. So you learn to project out in price and time, and there are very, very few styles of analysis that do project forward in time. So this is something I really encourage you to do. Take this workshop and build your understanding of the markets in a way that you never could before. I promise you, you do this, you will never see charts again the way that you did before. It's a whole different sense of the movements and energies of the market. So go there right now to our navigation up on the top, Cycle Analysis Workshop. Click on that. I do have a video on there. You can learn all about it, tell you about everything that's in the 20 video modules, and you'll be well informed and see this great offer that we have in there. So Cycle Analysis Workshop, go there right now. All right, so now let's get into our best and worst stocks for the week. Like I said, Tesla, which has moved up sharply, has gained about 17% on the week, and that's after getting absolutely slammed. So let's take a look here, and again, we're looking at cycle analysis. So this is a different chart than you will see in most of the other analysts, the world of analysts type of charts that you will look at. There is a lot of writing that's on my charts, and a lot of annotations, and our subscribers for level 4 get our live charts on their Thinkorswim platform. So I have all of these notes to them in there. Let's just talk about what I have in here. We'll take a little closer look. So you can see in here there are cycle brackets on the bottom. These are the idealized cycles. That's as if there was a rhythm in the market that moved exactly with common distances between lows, but they don't really. They're always a little bit off, but the energies are pretty visible when you see that. So you can see this cycle right in here. You see that? That's this right in here that we have marked off, and then the next, as we call it, a half cycle in this harmonic family, marked off right in here that you can see. And then we had this same pattern in here and the low do right at this point. You can see these blue spikes look at these overlapped out of phase cycles and show you that, well, there's a low do right in here, and there was a low do right over here, and then another one right over here. So we kind of expect this rally, which came right on time, to fail in this resistance zone and then roll over, get kind of a dip right over here. This is the one we're suggesting is going to help the traders that have the short side trades on as it got into this resistance zone. You can see our note in here, August, September. We think the stock is going to sub 220. 17% gain on this huge volatility, 243 to 309 range for the week, pretty wide. It's on our list of riskiest stocks for 2018. It's actually down for the year, you could see that, but not much. It was down a lot more before it gained 17% this week, and we think it's going to continue to chop its way down. All this hope for no cash squeeze, that's ridiculous. Go read the Bloomberg article that's out this weekend that says they're burning $6,500 a minute. So their production way below what they anticipated. The competition is massive. There are articles out there that show 20 or 30 cars that are priced similarly with better, options within the car that are electric or hybrid, that are phenomenal cars. The incentives are going to be going away sometime in mid-year or be starting to get reduced. So this Tesla, we believe, is a huge amount of risk. And those people that think that, the worst is behind it and now they're going to be buying a company that is $1,000 in a couple of years, they're going to pay a price for that, in my opinion, because this stock is just going to run, in my opinion, into huge issues. So they're happy now that the company is making half the cars that they expected to be making per week at this time, And we think that even though it's been very strong this last week in this big rebound, that it is going to start to run into trouble again. So that's a look at Tesla, and you can hear my extremely bearish attitude in there. Cheesecake Factory, this is a really bullish chart in here. Gains 9% on the week. It's been a positive pattern. It's now gotten up into resistance. This is a very interesting pattern. Now, for cycles, when you get a positive cycle like this, positively configured, in other words, it ended higher than it began, it sets up a base to move up higher, and then once it breaks out above this level, you can see the potential for what happens. It's exactly what happened right in here as it broke out above this positive pattern. It's been positive and now gets up into some close to this target zone. The 78.6% fib extension generally is our target area, or a little bit higher, and you could see these major fib resistance areas. So this is a very key area, 53 to 55. We think it will stall, and you could see our projection here that it's likely to come down into that intermediate support sometime into May. Of course, May is when we think the stock market's going to get hit again. So that was up about 9% on the week. Abercrombie, we'll jump here into the retail category. Big upside week in here. As it breaks out, no news on the week, but it gets above that resistance zone right over there. Again, we're looking for this to roll over and come back down into support, but this has been a positive pattern also. You can see in here, negative cycle, negative cycle, negative cycle, 3 in a row. Positive cycle right in here, and then a positive cycle right in here. Generally, they follow each other, and beautiful pattern. This, by the way, we saw as a risky pattern based on valuation, and it's on our riskiest list for 2018. So far, we're wrong about this one. We'll see if it can continue to perform and whether or not it can get earnings to support the valuations and fight off the problems with a lot of retail big box type stores. Under Armour, another one that has got a nice pattern. Now this is just a base being built right now. You can see it was in a very strong declining pattern. Here's your cycle, declining. Here's your cycle, declining, declining, 3 in a row. You can see that, actually 4 in a row. That was a bad one, and that keeps this pattern going in a stair-step downward until now. A base being built right in here, a low due in this support zone in the next 2 or 3 weeks. We think Under Armour's got a shot to fly on the upside. This is a nice bullish pattern. And the last one in this category, AEO, which is American Eagle Outfitters, that gets up into that fib extension zone right there, which would be a target zone. And you can see in here a nice positive cycle, and positive cycle. So it's late in here, and late meaning you can see how long this one rallied, how long this one rallied. Well, this one's running out of time. And that says likely to get a pullback from this resistance zone, up about 5% on the week in American Eagle Outfitter. But we think that in about a month after a pullback, it'll then probably be a buy. So that is not a bad pattern when you look at it, but super extended and very likely to pull back. You see that big resistance that it broke out of? We would be very surprised if it didn't pull back into that area right there in that what was a breakout zone now becoming a support zone. We're going to pop over into the energies right now for a moment as we look at Diamond Offshore. This is an interesting pattern in here. This has our colored phasing in there. Now, and our colored phasing shows you when it's in a rising zone, a corrective zone, or in a negative zone. In other words, where there's a high probability of decline. You can see in here where the negative zone was formed right in here. Hull moving average turns negative there, and you get a breakdown underneath that green zone that sets up a decline all the way through that cyclical period there. This one over here breaks down early and again sets up a long decline. Now I want you to note that this one broke down and then put in a bear flag and came and tested the low. That's what's going on right over here. So we think that there's going to be a pullback under $14 right over here. And then if you wanted to buy it, that would be a better timing in here. So we think it's a bear flag that's forming. Diamond Offshore up 9% on the week, but we think that it's not likely to continue this, and a decline maybe just over the next month makes sense to us based on these patterns. Also in the energy, ANDV gets a big jump for the week. It moves up into the resistance zone. Now, when you get a negative pattern like this one right in here, that's this cycle here, it sets a top and then you move up into the resistance zone. Back several weeks ago, about a month, I did a special and I said it's very likely that there's a 10-point bounce coming in this stock. Well, I was wrong. It was a 20-point bounce, and you can see it perfectly came in the timing of this rising phase right over here. We believe it's over with, and that this stock Andover is likely to get a pretty good pullback from this area. So a big strong gain on the week. That is a stock that we think is not likely to be able to hold that resistance zone. Going to look at a couple more stocks in here. The next one we're going to look at is one that's setting up pretty bullishly. Of course, the tariffs, the first tariffs we heard were steel and aluminums, and then they backed off on it and gave a bunch of countries waivers, and aluminum prices have since come down some since that. And in the meantime, Alcoa AA is, in our opinion, setting up as a buy. So this stock up about 8% on the week. And here you could see again our colored phasing. Usually when you see colored phasing, it's on the stocks that are in our focused list. We have our focused list is made up of 56 of the widely held stocks and best traded ETFs, especially for options. And then we put in 24 of the futures and indexes. Excuse me. And this stock right over here in that focus list looks very viable to us. So in other words, this yellow zone is ending. In other words, the corrective period is coming to an end, and the rally period is now coming. This is the base metals right over there, which have been, of course, soft. And this is a morning star pattern forming right in there at the cycle low period. So we're looking for a rally to come in here, and we think that it could challenge this last high way up here at about 56. This is a bullish pattern. It's bullishly configured in that you can see in here this rising cycle right there, this rising cycle. The probability of getting past this resistance zone and even getting up close to that level is high when you have this formation. So we are liking Alcoa a lot. The last one in the best stocks for the week is NetApp. Network Appliance, as they used to be called. Bullish pattern. You can see in here as it had a beautiful positive cycle when it got really late. In other words, when this cycle got really late, we were looking for a correction into these blue timing spikes. Look at that. Perfect there. And then got into this rally phase and is continuing on the upside. We expect that it's going to get up and test that 70 area even pretty soon. So this is still a positive pattern, and were it to get a pretty good pullback, we would buy it. I think it's a strong looking stock in there. Network Appliance and NetApp as it's called, and that is our best stocks for the week. And coming up right now is the worst. All right, worst stocks for the week. With the tariff threat, the Chinese stocks have been under pressure, and the worst stock of the week is a Chinese ADR here in the U.S., Alibaba, BABA. This looks like a major top forming to us in Alibaba. As we have a head and shoulders top being formed in here. Now, I don't have colored phasing in here, but were this to be a colored phase, this would now be turning red right here because it's underneath that low and pointing to a decline out here into June. So this is our projection right over there. Here's your head and shoulders top that's being formed right in here. You can see that and just about breaking down. And this is your Head and Shoulders measurement down over here, and this is the 61.8% retracement down there. So 124 to 131 is our downside target based on what we're seeing in here. This is a bad pattern. Now, the Head and Shoulders are formed by cycles. You might think that Head and Shoulders are just a pretty image, two-dimensional image on a chart, but they're not. Cyclical energies form these patterns, and they give you an important message. And in this case, it really looks like a major top being formed in Alibaba. Decline into June, the stock down about 7% on the week, and we are hating it. If it was able to get a bounce, we think that it is going to be a sale. Regeneron has been a biotech that has been in a lot of trouble. Down 6% on the week on no news. It's been in a horrible pattern. But I want you to see that we have a comparison in here with the IBB, that's that light purple, and then a Regeneron right over here, which is about to make a low in the next, we'll call it 2 to 3 weeks, looking at that. So a horrible stock. You can see in here this really negative cycle and this one right in here, but likely to get a bounce once this low is made. We don't think it's quite made yet, but keep your eye on it because we think it will make a bounce. And as you can see, IBB getting ready to bounce. I'm not showing you Gilead, but Gilead, G-I-L-D, is the best pattern in the group, and I think that one might be the one that's most viable. Xilinx gets a hit this week. 5% analysts downgraded it. Look at that pretty pattern. What do you see there? Well, you see a diamond formation. This formation here, a big evening star made that top. This is really an unusual formation, and when it happens within this cycle pattern, sometimes it's a little tough to read and see that it's forming, but it looks like it's now projecting down to the bottom of this range. We're going to look for the stock to head down near 61. Yes, late May or June, which is the target for most of the things we're looking at. Timing-wise, remember, cycles project out in time. Here's another one projecting out into June on the downside. This is Rand Gold. Analysts downgrade on this one. We saw the breakdown. So analysts downgraded it this week. We saw the breakdown over here 7 weeks ago, which suggested it was going to decline during this whole period of time. So we don't know what analysts look at, but what we look at are these pictures of energies in the markets, and this said that there was trouble out there. Square moves down also. If you watched our tweet a couple of weeks ago when the stock got a big pop, as we at that time got a crypto pop, this stock's been moving up based on the fact that there's likely at some point to be some acceptance of cryptocurrencies or some adoption. In the meantime, we thought that it was going to pull back sharply to about 44, and there it is right now, 45.62. So it's got another 2-3 weeks of correction here on the downside. Then we think it's going to try to bounce again unless cryptocurrencies melt down. Bitcoin is 6,600 now, with our target still at 4,500 on the year. That came when it was over 17,000. So this one still looks like it's got room to move, and we wouldn't be surprised if sometime later in the year there was a meltdown in this stock after it tried to rally again. So this is not one that we're all that favorable in. Up 5% on the week. This is doing pretty much what we expected it to do. NVIDIA, NVDA, another stock that has suffered from the tariffs, as the Chinese have been, of course, grabbing our intellectual material, and that's where this thing all started. It's in this support zone, and notice the 34-week moving average right there. This stock is likely to hold this area around 208, 207. This is around 207, yeah. And you can see that it's moved up that 34-week moving average for this whole period of time, right? So we think that that support zone is likely to hold. If we get under 207, and you can see in here the cycle corrective periods right in here, right in here, right in here, right in here. Each of those brought pullbacks, as you can see, each of those right there. And this is predicting an advance to start in about a month, 3 weeks, 4 weeks. So we would expect that this area could hold in here. But if it gets below it, it could be an important message for NVIDIA. Deere has been suffering from the tariff situation also, and we have this as a breakdown stock. Notice the red zone. And that declines, of course, out into June. So we think that Deere, which has lost about 4% on the week, is going to continue to move on the downside. So that's a look at the stocks that are the worst of the week. There was some pretty ugly ones in there, I would say, and some potential opportunities coming up then in the next several weeks. We'll be right back with our short-term view for the coming week. All right, this is the short-term view for the coming week. Do this every single week. Last week I was sick as a dog, and I still have a cold. You can hear that. So all I did was the stock market S&P 500. I said that I thought that the stock market early part of the week would have a big rally, get over 2666 on the S&P 500, and then turn around and move down again. That was basically a bullseye, as the market has done exactly that. We're going to take a look at all five, though, of our of the major markets that we look at in here, and give you some sense about the short-term view. Don't forget, follow us on Twitter at askSlim, and become a subscriber on our YouTube channel. This gets posted on YouTube all the time, and sometimes we put up some other really good stuff on there. Also, don't forget, give me a thumbs up if you like getting all this material. You want to get our videos. Again, we have over 300 videos in our library. We call that level 2. If you want to get our rankings and trade setups, that gives you all of our 80 stocks with rankings at 3 different time frames for investors, for scalpers, for swing traders. We put up trade setups a couple times a week, so there's good, whenever we see a good zone to put something on, we put that in there. And also our level 4, which is our charts on the TOS platform. If you take level 4, you get everything. If you take level 3, you get all of the rankings and setups and all of our videos. So you can try us for a month for half price. Write me Slim at askSlim.com, and I will send you that special link for the half price for levels 2, 3, or 4, whatever you want. I'll send all of them, and you can just pick, because we give you the information on what's in each one. So Slim at askSlim.com, I'm going to send you that special half price link. All right, so now let's get into the short-term view for the coming week as we look at light crude. So this is a weekly chart, which is not what I wanted to show you. So we're going to move over here and switch over to our daily chart. I'm going to move this out to a 2-year daily chart, because that's how we get the perfect alignments on these cycles. And there you could see it right in there. So what we were looking at here on the short term was that this dominant pattern and this minor pattern were pushing down and saying that it was likely to correct. You could see where both of them were doing that right in here, and you got a big move, downside move. When only one of them was moving down and fighting the upward trend, it only gets a small downside move, as you could see right in there. But this was absolutely perfect, and that downside move, which is getting into these short-term supports in that 89-day moving average, looks to me like it only has a day or two left to go. Momentum in here is still positive, but giving it up, just turning neutral. So we'll call it neutral momentum in there. We'll say 1 or 2, 3 days potential. By midweek, we should be turning up and getting back to the upside. So it looks like a choppy week, maybe down a little bit, and then starting to come back in light crude. We think that and have believed that 66.5 area was the high for the year. And it still looks like there's a potential that will be the high for the year. So momentum in here was positive. It's now neutralizing, and it's not a great picture. We'll look for a little bit down and then returning back to the upside in there. Take a look at the dollar, DXY, right in here. So we're going to look at and see that what we expected was this area right over here is pointing to a pullback. So let's just get a closer look right over here because there's a lot of lines. And what we see is that this cycle peak resistance right over there is giving it a problem. You can see right there. And now we're in this area of minor pullback. So we're going to look for a minor pullback this week, maybe a few days, and then bouncing up again. So that's pretty similar to the pattern that we're looking at in light crude. Just coincidentally, they do look that way. So the dollar looks to us like overall, this kind of a modest uptrend that we're in, that you can see right here, is likely to continue. We'll get a pullback and then we'll try it again on the upside. We thought that 91 level over here would eventually get touched. There's still a possibility for that as we look at the dollar index. We'll take a quick look at the euro because some people trade the euro as the proxy for the dollar, and you can see in here it's getting a little bit of bounce, but this is a breakdown. In other words, it's gotten below that level right over there, and we said the dollar is likely to, you know, make a little bit of downside move and then rebound. We think we could get a little upside move down on here and then move down. This looks to us like the trade as a short in here as far as what the best opportunities might be. The gold market /GC, you can see in here that it is pointing to a bottom due. Here's the 89-day moving average. It's been really good support. Momentum in here is neutral and indecisive. See this slim ribbon right over there, how close it is together? When that gets close together, it tells you that it's not holding its momentum, not in either direction. You see where it got positive here and the slim ribbon started to widen? Well, that set up a good upside momentum. Right now, you're not getting any momentum set up. What you are getting is a bottoming due right in here and then likely moving up over there. So the dollar, maybe a narrow range, would help gold actually get some legs in here. And we only see a narrow range in the dollar. So we're going to look for a buy opportunity here in the gold market. We're going to call it for this bottoming, a bottoming week, and then up for the week in the gold market. So that looks a little bit better to us and the right point for it to make a bottom. /ZB, we're going to look here at the 30-year. We'll focus in on that one today. And this also in a period that we're expecting it to pull back. So we think we're going to be in a choppy area for the stock market. That's probably going to give this as an opportunity over this next week to just be choppy in that zone. We don't think it's going to be able to get up here past this resistance, the bottom of that resistance right around high 146s. And we have positive momentum in here that you can see. So when you have positive momentum and you have it getting oversold here on the bottom projection oscillator, that says to you there's not likely going to be much of a down move. So we're looking at, you know, mid 144s, high 146s as pretty much a range in here for the bond market. It's really not giving a lot away in there. As we see most of these short-term markets in here are pretty stuck. There's not any real trade screaming at me, though I do like the gold trade for the next couple of weeks. In other words, it looks like it's bottoming, and if there's any short-term trade in there that I see that looks like it's got the best possibility, it's that one right there. Maybe the euro on the short side, but usually if gold's going up, the euro is pretty firm, so it's not going to, if that works and gold goes up, then the euro is probably not going to give a lot of ground on the downside. All right, so now we're going to switch over to the stock market. And we're going to look at SPX, the S&P 500. Now, you've noticed that I haven't shown you the intermediate patterns in here. We're only looking at daily, and we're only looking at basically the widely followed main futures contract as we looked at gold and looked at the dollar and looked at oil. If you want to see all of our analysis in the stock market, intermediate and daily, and look at all of the major indexes, then please do subscribe. Remember, level 2 gets all of our videos, and you then will see that in our Future Speak video, which we do every single Wednesday, which has all of that information in there. So become a level 2 subscriber. Again, write me and you can get half-price trial for a month on that. So we're going to look at a range that I think is setting up in here. And last week, like I said, I thought it was going to rally up into this resistance zone, which we had listed as a sell zone, and that was spot on. You can see that right over there. So what we have going on in here is kind of a battle between these patterns. In other words, this is kind of a pattern that's positive, that big one, and that's the dominant one. This smaller one right in here that you could see rolling over, well, that has another week or so to go. And then this one right in here is also rolling over with another week to go. So we have this fight going on of this dominant rebound essentially happening and this other corrective period right in there. And that's likely to give us a range. And yesterday, on Thursday, I did a stock sectors video that I gave the 19 stocks that I thought were the ones that you could buy to scalp on the long side when this dip came. So if you want to go watch that video, you'll see the ones that I think are buyable for short-term trades, you know, day or two swing trades, or for scalping on the long side. So here's the range that we kind of think is getting set up in here. The outside of it is the high 2600s right there, but this area where we stopped right here at 2672, that really looks like the top of the range to me. This bottom of the range right over here at 2551, well, we're not exactly sure we're going to get under 2600, though there is a pretty good chance of it, because you could see there is some downward momentum that has been here, and the downward momentum remains in force. So what happened is that you could see that red arrow, the momentum turned negative, and then when you get overbought right over here like this in the projection oscillator, the probabilities are extraordinarily high that you're going to move down again. So we're developing this range, and I think that this range is essentially a consolidation range of the big decline that we're in, and that this could last, you know, another week where, you know, chops around here towards the downside. You get another rally over here that lasts for another week. So this is a couple weeks here, and then it starts to accelerate here in April. And again, we think the low is in late May or June, so that's likely to be the time period that the biggest declines are. So we just think we're in this choppy consolidation period right now. There's your resistance zone, there's your minor support zone, here's your 78.6% fib from the weekly, that's held it up there at 2580-ish. So that's your zone, and that's what we think is going to happen. Choppy period in here over the next 2 weeks. That moments of relief when we see somebody like Kudlow come out and give us some bullshit, about whether or not everything is just fine, or we get time periods where the markets get scared. So big choppy zone. I think that you can basically fade both directions right now if you give them room, because there's a lot of extremes in here. And then I would say a couple weeks, the risk will really accelerate to the downside in this market. That is market week for the week. Tons of great information, I think, and very valuable, hopefully, to you. Again, we really want you to become a subscriber. Learn this type of analysis by subscribing to our special 30% off period right now. In this pre-launch period for our cycle analysis workshop. And then, of course, you can get our charts right on Thinkorswim platform, which we send out fresh every single week. So I think great information. Follow me on Twitter at askSlim and give me a thumbs up. And I want you to have a great week. Be careful, because it is so crazy out there. And we're always wishing you great trading.